Hello, everyone, and welcome to the Taking Stablecoins Mainstream webinar. We really appreciate everybody taking the time to join us. Depending upon which time zone you're in, we're kind of represented very well geographically here. Before we get into the questions, I just wanted to first and foremost thank our sponsor, GMO-Trust, for not only sponsoring this panel, but also our stablecoin report. I'm sure many of you in the audience have read the report. If you haven't yet, please go to the event tab and we have a link to it. It's been really making its way around the globe, which is very nice to see. Our sponsors at the Blog Research allow us to have the time and the opportunity that we need to create these products and services such as this webinar. So without further ado, I will get to the first question, which is actually for Kurt Bierbower from GMO. Kurt, can you just tell the audience a little bit about GMO-Trust and how does it relate to stablecoins?
Sure, of course. And first, I'd like to thank everyone for joining this call on the partner side. The folks on this call were instrumental to that report being generated and also kind of collectively working together. I think we're doing some very interesting things, which we'll get into later in this. But to answer your question, Mike, so GMO-Trust just overall is a NYDFS regulated limited purpose trust. We're very similar to Paxos in setup. We've recently issued the first regulated JPY stablecoin. We've also issued a USD stablecoin, and we'll be launching a variety of technical services off of those as well. Generally, GMO Internet is a publicly traded Japanese financial services and IT conglomerate. On the financial side, we have a number of interesting businesses. We have the largest FX platform in the world by volume, does about $1 trillion a month. The largest payment gateway business in Japan, the second largest crypto exchange. We have an exchange in Thailand. We have a mining business and then the stablecoin business. So kind of merging those businesses together has been very interesting for us and will continue to be so. And also a lot of our traditional businesses will likely go digital in the future. So we're looking forward to accelerating that.
Great, thank you, Kurt. Yeah, I mean, I think that digitization has been kind of the theme of the past year, especially with what's going on globally with the COVID-19 crisis. So Samuel, I don't think that there's really any question of which organization you're from with the shirt. Can you please tell the audience how does Binance kind of relate to stablecoins, and what are you doing there to help take them mainstream?
Yeah. First off, thanks to the organizers for having us, right, and thanks to the audience for dialing in, right. Binance, as most of you might be aware of, is one of the largest exchanges in the world, right. We don't just run an exchange business; we have, a crypto ecosystem as well, right. We do, the Binance Launchpad, Binance Academy, right, Binance Charity. It's kind of everything in one. We even have our own chain, Binance Smart Chain, right. We, in conjunction with Paxos, right, also a NYDFS approved and regulated entity, we launched a BUSD with them, right, which as of today is the third largest stablecoin in the world, right, only behind USDC and USDT, right. However, it has the fastest growth among the big three stablecoins, right. So what we're doing within this space, right, mostly with our stablecoin initiatives, right, is for DeFi, right. A lot of it is applied in DeFi, right. You have liquidity farming, right, and mining, right, and of course, trading is a large part of it, right. A lot of our users use BUSD where they can enjoy triple rates, right, in place of using USDT as a form of hedging strategy. Number three, of course, would be payments, right. Binance is looking at pushing payments, and BUSD would be at the forefront of it. That's all for now. Thank you.
Great, thank you, Samuel. Yeah, we'll be getting to some of the use cases that are expanding for stablecoins pretty soon in the questions. Marisa, so what is Liquid doing with stablecoins?
Yeah, sure. So nice to meet you guys. Thanks all for joining. So Liquid is, if you're not aware, is one of the oldest global cryptocurrency exchanges based in Japan, with offices Singapore, Ho Chi Minh, Manila, so we're mostly APAC based. And from day one, I guess Liquid has been a fiat to crypto exchange, becoming the first licensed exchange in Japan as a fiat to crypto exchange. So with the fiat to crypto exchange, Liquid's focused a lot on kind of aggregating liquidity, with our Bitcoin JPY pair being our strongest. And so what we're looking at with stablecoins is kind of how can we aggregate, the liquidity from the stablecoins into our fiat pairs and create more seamless like on and off ramps with stablecoins, and kind of, bypassing some of the banking rails. So that's what we're trying to do. And then we've been working very closely with GN and Kurt here to be able to allow our global users to trade into our JPY order book for Japan. Yep. Thanks, guys.
Very cool. Yeah, I mean, I think that anybody that's read our stablecoin report can see how much USD really dominates the fiat collateralized stablecoin space as of now. But I think that expecting other currency denominations to really start to grow over the next several decades. And before we get to that, though, Edward, can you tell us about ZeroHash and what are you guys doing with stablecoins currently?
Hey, so good evening from Chicago, everyone. So ZeroHash essentially is an infrastructure to allow any group to launch digital assets through a couple of lines of code, in particular to North American clients. So we're highly regulated within the United States. We hold a BIT license, for example, and we power some of the more traditional groups to enter the crypto space for the first time. So for example, we've just powered a number of large broker dealers, think Robinhood competitors such as Tastyworks to enter the space. We recently announced one of the largest neobanks in the United States, Moneyline, is opening up access to their millions of clients through ZeroHash. So essentially taking existing clients and offering them crypto side by side where they already bank or where they already trade. And that's really what we do. So in terms of how we're involved with stablecoins, we obviously support them. We support, I believe, 6 different stablecoins as of today. We've also supported GYN and GUSD. And we also provide custody and technology infrastructure for the issuance and minting and redemption of stablecoins.
Very cool. Yeah, infrastructure, I can't really speak to that enough right now because that's actually the next report that I'm working on for the Black Research, digital assets, data, and infrastructure. And it's really fascinating to see what's going on behind the scenes there and how important that is. So last but not least, Ian from Shift Markets. Ian, how you doing? Can you please just kind of tell us what you guys are doing with stablecoins currently?
Sure. Thanks, Mike. Nice to be on the panel with everybody. Thanks, Kurt, for sponsoring. So yeah, my name's Ian. I'm the CEO of Shift Markets. Shift Markets, so originally from the FX space. The company started in 2009 and focusing on electronic trading in FX. So very familiar with GMO as a Forex company, FX company. We got into the digital asset space in 2016-17 when we kind of moved over to our technology platform for allowing our clients to set up crypto exchanges. So we do a lot of exchanges globally use our technology to launch fiat to crypto exchanges and crypto to crypto exchanges. Stablecoins, exciting part of the growth of the business. I mean, we look at, as an FX person, stablecoins is an interesting term. It's stable to the currency that it's representing. I just kind of call it FX. It's basically a token that represents a fiat currency. And the way we see it, we see FX moving on chain more and more. So with us, the technology offering allows people to set up exchanges. We have some interesting things going on with depositing and earning on deposits. So we'll be launching that with GN in a few weeks. To allow clients to deposit digital yen and earn interest on digital yen. Don't think anyone else is doing that yet. And we're also involved with a blockchain project to move FX on chain with some derivatives and things like that. So exciting time for the industry, and we're looking forward to seeing FX move more on chain.
Yeah, it really is an exciting time for the industry. I mean, the next set of questions are on growth and use cases. And realistically, I'm sure that's why we have a lot of people in the audience right now, is that total crypto market capitalization just passed, I believe, what was that? 2 billion for the trillion for the first time ever, just yesterday, I believe. And today we had the Coinbase IPO. From a total supply standpoint, though, Kurt, of stablecoins, that actually recently just passed 68 billion. And that was year-over-year growth of 8x and 20x growth in 2 years. So what do you attribute to the rapid growth in stablecoin supply?
Yeah. So I think kind of 5 key areas, and this isn't all inclusive by any means, but just general BTC movement. So a rising tide lifts all boats, and we've seen that across the ecosystem. I think stable coins as trusted, low volatility kind of collateral on the lending side. The lending side has really blown up in a positive way this last 12 months. I think you're seeing more and more movement into DeFi and more activity there. Perhaps a different audience, right? But one that's growing, and stable coins are continually used more frequently in DeFi. Fiat on-ramps, of course, driving new growth onto platforms. And then I think the other big one that we hear the big announcements about every single day are, okay, the tier 1 trading firms, the FX firms, the tier 1 banks, and how do they want to get into this space? And logically, it's, okay, offer Bitcoin, maybe Ethereum to customers. But then what is the next move? And that next move is, how do they use stable coins to make their infrastructure, their processes more efficient, faster, cheaper, et cetera. And regulated fiat-backed assets, particularly dollars, yen, other major currencies, is that gateway for them to kind of get into digital. I've been in blockchain now since 2014, and a lot of that time was kind of with Deloitte Consulting's blockchain business. So I've been working with banks for a while now in this space, and they're really starting to finally move from pilot to implementation phase, which is exciting to see. So it's been really interesting to kind of see this evolve, and we're now at this kind of hockey stick of growth where we're seeing this go into practice, which is nice.
Yeah, I mean, every single person that works in this industry is really passionate. I think that, seeing $2 trillion in total market capitalization is really eye-opening to many people. Not only those that kind of are in this industry, we've all been waiting for this type of day. So it's great. It's great to see. And Samuel, what would you, adding on to what Kurt said, what would you attribute to the really rapid rise in stablecoin growth?
Yeah, I think to be honest, Kurt has a very he has really summarized everything in a very concise manner. Right? Those were going to be my points as well, right? We are seeing huge institutional intake, right? We're seeing huge a boost in the DeFi space, right? Also, of course, fiat on-ramps are some major areas where new monies are flowing in, right, into the stablecoin space. Right, but of course, it's worthy to note, if you have a large player like a bank or hedge fund, right, coming into this space, if they want to take a position, right, in cryptocurrencies, it's very likely that they will enter via the path of stablecoins, right, so as to manage their risk and time the entry of the buy, right. So we have dealers like QCP, Alameda, and all. They are all mostly dealing in stablecoins, right. They make a lot of money over there, through arbitraging, right? But I think ultimately, one of the topics later would be use case, right? How do we actually push this initiative out of the industry itself, right? But most of the points have been very well summarized by Kurt, and I agree with him on it.
All right, that's great. Well, I'm sure you know all about risk management as the head of compliance. But so you touched on use cases, which is actually kind of what we're getting to here with Marisa. what other use cases outside of trading do you see kind of developing with stablecoins over the next 5 to 10 years?
Yeah, I think Kurt also touched on a couple of the things that we wanted to mention, but maybe to add, I think maybe payments and merchant services is somewhere that we might start to see more stablecoins emerging. We've been working quite closely with a card acquirer here in Singapore, and kind of discussing how they can use stablecoins to settle with us, because and settle with their global merchants, because it's just a faster way. Currently, we're only getting, paid and settled every 2 weeks, and with stablecoins, we could potentially expedite that service. So I think that's one thing, is like settlements for merchant services, and then another thing that I think payment related, it might be also remittances. So kind of been discussing also with some like local banks here, or kind of mobile banks that might want to use this, like what Ian touched on, which is using stable coins in place of FX, or almost using them in parallel. So yeah, I think those are some of the other use cases that we see emerging, and places that we're hoping to build a stablecoin exchange, so we can aggregate those stablecoin players, so we can build these use cases for payments and merchant services and FX. Yeah.
Great. And Edward, what else can you add to that with use cases? And what is ZeroHash doing to help with some of these expanding use cases?
Yeah, I mean, I think definitely the use cases are interesting. I also think knowing where the limitations are today in some of the use cases is also important to recognize. So obviously payments is one, and Marisa just touched upon many of the benefits. There's no chargeback risk with stable coins. You get paid more quickly. There's less intermediaries, so hopefully less costly. But when a few years ago we were talking about micropayments in crypto, and I think micropayments, at least on stable coins that are built on Ethereum, aren't really realistic right now, especially with the gas rates that they are. So I think you're going to start to see more stable coins from more issuers in more currencies built on more blockchains, and so potentially you start to have stable coins. And this is often the question that I get asked, which is, why do we need so many stable coins? Well, why do we need so many blockchains? It's going to be the fundamental same drivers there about that. I also think it's worth recognizing as well that the underlying currencies also there's a different impact, right? So we're based in the US, we have clients globally. An issuer in Euro or JPY with negative interest rates, it's a loss leader. You have to make money in some other way. And so the economics also have to make sense for the issuer as well. But I think what's really interesting as well about stable coins, obviously apart from payments, apart from trading, is also the reality about how it can be a store of value for many people around the world, to be able to get access, whether it be to the US dollar or some other currency that they wish to hold. I think that's really interesting to start to see, is how potentially the US dollar continues to dominate, but just in a slightly different form.
Yeah, totally. I'm with you there. And use case wise, for sure, I know that another thing, when we were on Nick Carter's podcast for Castle Island Ventures, he talked about how, his fund was settling actually in stablecoins, some of the deals, which is something that's pretty cool to see. I heard that a lot of people in Silicon Valley and venture capitalists are kind of comfortable doing that, and it's really an exciting time. So, Ian, from a Forex standpoint, that's something that you kind of added as your quote, I believe, in the beginning of the paper, that it wasn't necessarily, they're not really stable coins to you, they're just Forex. How are the Forex use cases expanding?
Yeah, so FX is the largest market in the world. There's a lot of different ways that FX is used. Basic trading, payments were mentioned, definitely a major use case, speculation. But there's also things like the traditional financial system uses, like collateral. If you're borrowing and lending something and you need to put something up as collateral, people might want it in fiat currency. Stablecoin better way to do it, faster. You can do things with smart contracts to make the financial transaction smarter. Operational sorts of needs with companies, payroll, invoices, anything you would do really with FX or money as a concept, you could do with stablecoins. The way we look at it, it's just the blockchain's just a better mousetrap for delivering the same sorts of things you do with FX. Cross-border payments, derivatives, forward contracts, futures, all these things are things that could be on the blockchain, and I think should be on the blockchain, and probably I think will be on the blockchain. So yeah, that's kind of it's a multi-trillion-dollar market per day. It's still primarily the old-fashioned way, and I think that's going to change. And I agree with Ed as well. Just more blockchains, more stable coins, more ways to attempt to solve the problem. And there's going to be a lot of experimentation. But there's going to be some people that stand out and really push it forward. And, Japanese yen, for example, great way to do that. Major yield-hungry market, and very tech-forward sort of market. I think it's a great step for the industry. But yeah, that's where I see the use cases going with stablecoins and FX. I think it's very major use cases that we could see coming up.
Great. And that actually is an awesome transition over to the next set of questions, which will cover stablecoin denominations, cross-border payments, and Forex infrastructure when stablecoins. So, Kurt, according to the Blocks stablecoin report, 95% of the stablecoin supply is currently collateralized by fiat, and 99.5% of the supply is pegged to the US dollar, which is something that Edward was kind of alluding to there. Just for perspective, the IMF's SDR basket really, I believe, is only 60% USD. So it kind of shows you how much of this really leans toward the US dollar right now in the stablecoin ecosystem. So how do you see this changing over time?
Yeah, and I think that's natural, right? Because I guess currently it's the world's the world's reserve currency. We see it expanding into different currencies, whether that's Euro, JPY, as the use cases expand, right? So Ian was speaking about FX. The vast majority of FX volume comes out of Asia, right? So it's natural to want to trade, for example, a USD JPY pair, and we want to be on the forefront of kind of facilitating that on the asset issuance side, and then partnering on the exchange and lending sides as well. So as the use cases expand, we see this as expanding. And then also too, I don't want to jump ahead, but as regulatory guidance becomes a little bit clearer, then you have other major markets that can step into this space. And I'll kind of save that and table it for the latter part of the conversation. But that is going to be a critical driving factor as to ramping up other currencies.
Yeah, and it's interesting because this really is the internet is global, and pretty much anybody that has a connection geographically it touches, and that's really what makes this so much different than some of the other innovations of the past, is how many people have connections to the internet nowadays, especially with smartphone penetration around the world. I guess geographically there's going to be different demand. So Samuel, what is demand like over in Asia for stablecoins? Do you see other currencies like the yuan being digitized further in the future?
Yeah. But I think it has to come with a push, right? And it's very likely not going to come from the industry itself. Right? It's going to come out of the industry, right? Probably with clearer regulatory guidance, right? Or probably with CBDCs, taking the lead, right? If China launches a CBDC, then there might be a private. There could be a possibility of a private renminbi stablecoin, right? In Asia, right, regulations don't really allow local-based sort of stablecoins, right? If you're talking about some countries in Asia, in fact, cryptocurrency is outlawed, or they have a really gray status, right? India, for example, Vietnam, right? These are countries where not exactly very receptive to crypto, right? The central banks are not very receptive to crypto. China, of course, as well, right? So we do still see huge usage of stablecoins in Asia, right? But mostly USD denominated, right? And obviously for the purposes of trading, right? Or for the purposes of partaking in the DeFi space, right? But I do believe that over time, right, the USD stablecoins might lose their dominance, with the appearance of other multi-currency stablecoins, right? We will probably get there, right? But I don't know when. Yeah.
Great. And Marisa, how about the land of the rising sun? What's going on with yen-denominated stablecoins, and what is demand like in Japan for stablecoins currently?
Yeah, I think there's been, Japan's a very highly regulated environment. And so, there's been many discussions of various stablecoins being discussed. So I definitely think that there's demand for them. There was a settlement project, the Liquid Settle Network, and another Japanese yen stablecoin. And now we have GN here. And I definitely think there's much demand for JPY stablecoin because JPY, even in FX, is one of the most stable reserve currencies in the world that people flock to in terms of like when there's economic turmoil. So, and I think the banking system in Japan is really well designed right now for the Zengen transfers, domestic transfers, but it's not necessarily positioned for really good international wires or international payments. I think still moving JPY, offshore outside of Japan is fairly difficult and slow. So there's definitely a high need for a Japanese yen stablecoin. And then I think also economically, as Japan's aging population, shrinking population continues, then Japan is going to have more, dependency on foreign players and tourists entering. So I think Japan will need to innovate and provide smoother international financial services. So hopefully the JPY stablecoin can also help with that. Yeah.
Yeah, and I'm sure it helps to have international conglomerate that also is in Forex like GMO. Launching their own stablecoin right now. That'll probably help push things forward. Edward, Marisa kind of started talking about cross-border payments there. Can you talk more about that use case with stablecoins?
Yeah, I mean, cross-border payments with stablecoins, obviously there's few intermediaries, and it should be quicker. I think we've referenced, for example, with JPY, how difficult it is, for example, to get JPY into and out of Japan. We, for example, had to pay a consultant who translated something for us in Japan. And every single, there's like 3 or 4 banks in the middle, and they all take their cut. And it takes a few days for it to get there. Very often things are sent back. And so it's definitely a challenge in certain parts of the world, shortening settlement timelines. But the critical piece of that, obviously, is can you use the stablecoin? So it's all well and good if I can send a stablecoin to somebody, but do they actually want and can they actually use that stablecoin? I think it goes to Sam's point, which is it needs to be infrastructure driven. Stablecoins without an ecosystem, without an ability to use them, really serve a lot less value and they're going to be adopted less. I think it's also important to know with cross-border payments, for example, we can create a JPY stablecoin outside of Japan, but currently, and hopefully this is something that's going to change very quickly, and that's because of the good work of Liquid, GMO, and others, is for Japanese residents to be able to actually hold the JPY stablecoin. Today, a Japanese resident cannot hold a JPY stablecoin. And so that's a really, really important piece to really expand. And these things are going to move very, very quickly, but they need to occur for stablecoins to really proliferate.
Yeah.
Wow, that's shocking to me. I wasn't even aware of that. And I think we're going to get to stablecoin regulation pretty soon. But that's really interesting, actually. I wasn't aware of that.
And it will change quickly. But as of today, that's the case, and that's going to be the case in other countries as well. But you know, it will change. I'm very, very confident of it, and that's where GMO really is putting a lot of work behind the scenes, and that's going to create a ton of economic value for people who use JPY daily. But there's a lot of work behind the scenes that people don't see.
Well, we appreciate the flag bearers of the industry for sure. So, Ian, the current Forex infrastructure and the stablecoin infrastructure that exists right now, how can they work together? How can they leverage one another to help accelerate adoption sooner?
Yeah, so I think the current FX environment, as pointed out by a few people, has a lot of flaws. Just making payments across a border and across a currency is extremely complicated. And with Japanese yen, that's a free floating currency. Now, there's also currencies that have other issues like capital controls and lack of liquidity, and that's even harder, right? So, you know, some of the current FX pairs are extremely liquid, and I think for people to be really to adopt stablecoins, you have to look at the FX market and make sure you're hedged properly and understand how FX risk management works. I think the liquidity available in the FX markets make it a lot easier to do things like market making and trading on stablecoins, because you do have very reliable price points from the FX market to know where prices are, especially when you compare it to, you know, exotic new tokens that are, you know, different and have different concepts behind them. So I think that makes it easy in a lot of ways. And the problems are very evident in the FX market. And a lot of it's really just speed, settlement, and cost. The stable coins can really reduce the friction with just making very simple transactions that should be very easy to do in the modern age, but for whatever reason, they can be extremely complicated for all types of businesses. Getting bank accounts, getting approvals on payments, going through multiple middlemen and things like that, just to do something very simple, will be a thing of the past. I think once stablecoins are fully adopted. And yeah, I think that is the synergy between the two. And I think it's really FX just moving to the new technology. And I agree with Sam and Edward that it's going to be infrastructure driven. There's going to be things that people just want to do in a better way. Just like the internet changed all kinds of industries, finance will also be changed the same way with this technology.
And some of the bottlenecks, the things that are really kind of hindering, which might be regulation, could be some other things, maybe marketing isn't correct, or regulatory concerns, or lack of standardization, scalability. What is it, Kurt? How can we alleviate some of these bottlenecks for stablecoin adoption, and what are they currently?
Yeah, I think Edward touched on this a little bit, right? Regulatory. So governments are still trying to figure out what they want to do, how they want to regulate these, what licenses do you need, you know, which we actively discuss with multiple governments. And then secondly is scalability and kind of standardization, right? So I can't even count how many blockchains there are now, and what their specific use cases are. Some are more geared towards DeFi, some are more geared towards institutions, et cetera. So I think the point there is, okay, what are the top 5 or 10 blockchains that are really going to be used in the space for the purposes and use cases that we want to target, and how do we make sure we're compatible with each and every one of them, so it really scales seamlessly. And I think you're probably going to see a lot more direction as governments come out and issue their own, and maybe they force you to use a particular blockchain. Okay, well then, if we want to work with government-backed fiat or digital assets, then we need to gravitate towards that blockchain. And the banks are going to drive it, right? If JP Morgan is using a particular chain, okay, well, we want to be compatible with that. So it's dependent on the use cases that you want to pursue and the clients that you want to target, and also what happens on the regulatory side of the equation. But from what we can see, that's becoming more clear every single day. And I think we're going to have answers from a lot of the governments this year. At this point, it's simply too big to ignore. I think my final point is, we talked a little bit about the Coinbase listing today, and another Silicon Valley company is not that interesting to go public, right? But what is interesting is in the next few months that might eclipse the value of Goldman Sachs for market cap. So none of this can be ignored anymore. I think the tier ones are kind of scrambling to see, okay, how are we going to position for this? How do we adapt? Do we buy? Do we build? Et cetera. And that was the interesting story for me today, is figuring out, okay, what are the comps on this company, and why is it eclipsing banks that are 100 years old? So that's my feedback.
Well, speaking of tier ones, we were talking in the green room before, and we said that this report is kind of the talk of some of the tier ones right now. So it definitely, they can't ignore it. And you also can't ignore it when something like, say, Dogecoin, we're talking about meme coins and things. I'm looking at you, all the Doge army surpasses $11 billion. There are so many blockchains and different use cases, but I think it's time that we rein some of it in and we make it more standardized. Samuel, what do you think is really the biggest bottleneck, though, in your mind to stablecoin adoption?
In my opinion, the biggest bottleneck is that people are not using stablecoins for payments as it is, right? Just like when Satoshi wrote the Bitcoin white paper, he intended for it to be, a means of payments, right? But today, as we can see, it's a store of value, right? More than a means of payments, right? It's mostly a speculative sort of asset class, right? It's the same thing with stablecoins, right? I don't know the stats off the top of my head, but I'm guessing that out of 100 people, right, probably 99 of them use stablecoin for one of the three reasons. Right, either it's a store of value, right? Either it's a trading hedge, right? For example, if the market plunges, people sell into stablecoins, or DeFi, right? So it's one of these three, right? You don't actually have someone, using his BUSD or USDC, walking into Starbucks and saying, hey, I want to buy a cup of coffee, right? Even though that is possible, right? You have companies like offering these services, right? You have crypto cards offering these services, right? But it's just that people are not spending their cryptos, right? So this, we have to carry on building out these payment rails, right, to get more mainstream adoption, right? So much so that we tap into a new market, right? And the Coinbase listing is interesting, right? Because in a sense, with stock token listings, right now, stock trading is 24/7, right? It's no longer 5 days a week, right? So that's something new, right? And stable coins, right, if used in the payments domain, right, could have a greater outreach than Visa and Master, right? Maybe in some places where they don't accept Visa and Master, right, all you need is a hard wallet address, right, or a crypto wallet address, and you can make payments at that shop or vendor, right? So the potential outreach is possibly even greater than Master and Visa, but we need to continue building towards that direction, right? And hopefully that's the end goal, right? That's what we want to achieve.
Definitely. I mean, and speaking of Visa and MasterCard, they have so many plans right now for digital assets. And not only the digital asset cards, but really, I believe it might have been Visa where one of their CTOs or somebody that was very high up in the organization last summer kind of wrote a pledge in how they plan to really integrate a lot of their networks with the digital assets ecosystem. So it's very exciting to see that. From a jurisdictional standpoint, though, and geography, Marisa, what can we do? How can the different groups around the world, outside of, say, the World Economic Forum and G7 organizations, what can we really do to help speed this up from different jurisdictions?
Yeah, I think as an exchange, like one thing that we can do is definitely connect a lot of the stablecoin issuers together, the private issuers, and kind of help them to create an alliance. But I think probably the more bigger picture thing that that I'd like to see, that I think that we can also help, is like different protocols. We mentioned, different protocols issuing their stablecoins, and we've been seeing like Stellar, for example, bringing together different stablecoin issuers that are currently on Ethereum to move towards Stellar, and working with more legitimate players like Circle to bring USDC to Circle, or to USDC to Stellar, and then also introduce more smaller cap currencies onto that protocol. So I think a lot of work to be done with these like foundations and protocols to kind of bring them together, invite them to issue together, and then create easy to use experiences and use cases around their stablecoins. I think that's one way that we can help tackle all the various jurisdictions together, and also partner with them so that we can create a stronger network effect of stablecoins and grow the adoption. Yeah.
Great. And one thing that might potentially help would be speeding up settlement times, which Edward, I'm sure, can speak to more, because current settlement, for those that are mostly aware, is T+2, so trade +2. How are stablecoins, how could they potentially improve upon that, Edward?
Yeah, I just want to touch upon just a quick point around the use case, just really quickly. I think you're going to start to see, or you have seen, certain industries use stablecoins. Stablecoins that potentially, where groups like MasterCard, Visa do not bank those industries. Online gambling is one of those. You can start to say, okay, online gambling, those are your personal preferences. But if you think of it on a global level, in theory, right? Well, it's a reality that governments can cut off certain sources. And in the United States, actually, somewhat ironically, given what we've seen recently, with groups cutting off, payment groups cutting off certain political groups, giving money is seen as the Supreme Court has said, it's a freedom of speech in the United States. And it really is, to be able to give money to organizations and to certain parts, and that's my view about money. And I think that's kind of something that should not be lost. I also think on the use cases, we've also got to be realistic. The biggest cost when you use your credit card is because you want rewards. It's because the interchange rate is used to give you Amex points to go on your nice holidays. So are you willing to give up? I mean, that's also a fundamental point. Are you willing to give up those kind of rewards and use something that doesn't potentially give you rewards? But I do think you're going to start to see certain stablecoins start to create some sort of reward functionality. But I think that's really important, because that's, if you really care about the merchant, use your debit card, don't use your credit card. And so I think cost to the merchant also has to be tied to incentive for who is actually using the stablecoin. So I'll get off my kind of pitch there. So to go back to your question about T+2 settlement. So T+2 settlement is, right now between JPY and USD. If I want to send JPY from the US, it will take 2 days to get there. And that presents delays, and it's costly. Those pieces exist. So we, for example, power a large number of Japanese exchanges, some of which we're public about, including GMO-Coin, and power their settlement infrastructure. And when you want to send JPY, it takes 2 days to get it, which creates a cost of capital, right? And so if you can shorten that, and if people accept the stable coin, that's really exciting, because you're effectively creating value, because you're not losing 2 days of that capital you sit in and can be used by either the sender or the receiver.
Edward, I have to say, I mean, I really like that passionate impromptu there, and I think that some people in the audience did as well. I think somebody specifically said incentives are key, which I think that most of us can agree about that. Most of us work for incentives, and that's really actually the realignment of incentives with the Bitcoin network shows how powerful that can be when it's done correctly. Ian, how can we speed up from a jurisdictional standpoint stablecoin adoption?
Yeah, it's a tricky question because different governments take different positions on these matters, and the evolution of and migration to stablecoins will have positive or negative impacts on different countries. Ones with capital controls be very concerned about growth of stablecoins. It's harder to maintain capital controls when people can just send money on the internet. So that's going to be a big issue that I think is going to be an interesting problem to tackle next few years. So from the standpoint of will the jurisdictions cooperate, I think in an effort to kind of get in front of that, I think the industry could agree on standards on what sorts of things and what norms are acceptable for a stablecoin. Because, frankly, a stablecoin, if you're saying it's worth $1 or a yen, what's backing that up, right? And there's algorithms, there's deposits, there's different methodologies. And, the crypto community is pretty active. And I think there's a lot of self-regulatory communication and social media and things like that. But it's hard to follow and know what's right, what's wrong. What I could see happening is the industry just getting more together, established players who mean to do the right things, agree on standards on what stablecoins should be doing and how they work, to avoid fraud and deception, because it's very easy to create a token that you can say is worth something. I see that being a big, moving a lot faster than a governmental body trying to cooperate with another body, especially like the two largest economies trying to cooperate on that could be problematic, or at least take a long time. So I like the idea of the industry just really putting their heads together and seeing what can be done about it. And because ultimately and for everyone on this call, kind of just a kind of cliche term, rising tide lifts all boats. I mean, it's better if we can just get more people on chain. It's better for everyone on this call, better for a lot of people globally as well. And I think that's kind of the mission that we would have.
Well, we have 75 new recruits in the audience that can go spread the seed for us. 76 now, great. Please bear with us. We're making great time. We're on the last set of questions right now before we get to the main takeaways. DeFi and central bank digital currencies. Samuel covered a little bit of DeFi before, and central bank digital currencies, which are on the exact opposite side of that decentralized spectrum. Kurt, lead us off here. How can stablecoins play into the decentralized finance segment, and how much growth do you see coming from there?
Absolutely. I mean, I think we see a lot of growth in that area. What they can be used for: collateral for lending-based purposes, volatility hedging, arbitrage for currency trading. I think a lot of the growth in DeFi from what we've seen has either been trading or lending related to date. That might change over time, of course. The important part, we have to kind of take a careful, measured approach here. Everybody on this call who kind of runs businesses have to be careful about, okay, how do we balance with different regulations? How do we think about KYC, AML on the DeFi side? How do we make it safe for people to use? And then what type of audience is that geared towards? Are tier one customers and banks going to be using that type of technology? How do governments think about it? How do they? We haven't really seen how they're going to enforce or approach those particular projects yet. So it's been fascinating to kind of watch. We see regulated stablecoins being used in DeFi all the time, and that's continuing to grow. So it'll definitely be interesting to watch over the next few years.
So Samuel, from your vantage point at Binance, what are you seeing with DeFi, and how are stablecoins being used? How do you expect them to continue being used into the future?
It's mostly now, so what we're seeing, right? It's yields, right? Interest rates, arbitrage. Right? If you have money, you put it in a bank, right? If you're lucky, right, you get 1% per annum. For most people, they're not that lucky. They get 0 point something percent, 0 point X% per annum, right? And then they realize that, oh, if I put this money in, another platform, right, I could be getting higher gains, right? And I'm not talking about insane gains like, some DeFi platforms, they are giving, few thousand, 10,000%, 1,000,000% APY, APR, right? Those, you got to be careful if you even put a cent in, right? But I'm talking about very legitimate platforms that can give you yields anywhere between 6 to 10%, right? Those are, big name platforms, right? And if you do the comparison, right, those are returns that, kind of equivalent to, a good performing stock on Wall Street, right? On a good day, right? 8%, in investment banking, that's a pretty good annual sort of return, right? So if people can get that sort of use, right, in a platform that they trust, right, the next question is, why not, right? And the next question would be, what's the ease of entry, for me to get in, right? How do I get in on this game, right? So I think we are seeing a lot of institutional, inflows, right? We're seeing a lot of retail inflows as well, right? That's why, the stablecoin space is growing, right? Most people now, they're using their stablecoins for either DeFi yield farming, right, or trading sort of hedging, right? I think it'll continue to grow. It's quite interesting, right? Of course, regulations eventually will play a part, right? As Kurt mentioned, DEX, right? They might be regulated, right? FATF recently came up with a new ruling, right? That DEX, would be considered VASPs and would be subjected to the travel rule, right? So, who knows when new rules, regulations, or enforcement might come, right? But as of now, at present date, we're seeing the industry and the space, right? The stablecoin space pretty much grow like hotcakes.
Yes, and something else that's really expanding like hotcakes from a discussion and a policy making standpoint is central bank digital currencies, and that's actually kind of was a prelude to this stablecoin report. It kind of reads like a book, actually, like two different chapters from a book, and that was something that we discussed in the beginning of the report. How the central banks in many cases are kind of the root and provide the third-party commitment power for most money, because the unit of account really is the function that most central banks provide. Store of value and medium of exchange, there are so many different use cases from Web 1 to Web 2 and to what we're building now with Web 3 and the internet, that there's Venmo, there are things of that nature, but really the unit of account is the thing that central banks really want to keep with central bank digital currencies. And Marisa, I think that maybe you can speak a little bit more to this. How are central bank digital currencies and stablecoins, how do you view them? Do you view them as complements? Do you view them as competitors? Do you view them as maybe we could just all get along and just all do well here? How do you see it?
Yeah. I think it definitely varies from like jurisdiction to jurisdiction. I think, really big, economic powers like US and China, kind of issuing China especially issuing their own their own CBDC, I think will definitely trump any other stable coins that exist, because, in China's case is very unique, and they can just put everything into Alipay, WeChat Pay, everything into the any of the tech players that are out there, and just very quickly emerge that CBDC as the new kind of reserve currency. Meanwhile, like another country like Indonesia, where I guess they're still developing kind of their digital infrastructure and payment infrastructure. I think there's a stronger emphasis on kind of the private stablecoin issuers. So I think it depends jurisdiction to jurisdiction, and I think some places the CBDCs can definitely trump, versus others will be kind of led by the private coin issuers, working with their central banks and, educating the governments on how to move forward. So, yeah, I think it just depends. And, we'll start to see, how they complement each other.
Yeah, and I think that we saw that with Diem, formerly Libra from Facebook,
yeah.
their second version of their white paper, they talked about integration with central bank digital currencies, which I guess Edward, maybe you can kind of help us with that there. How can CBDCs help maybe expand stablecoin adoption? How could we kind of work together and really the private sector innovates very, very well. That's one thing that I think all of us can agree on. And there's a reason we work in the private sector. So how can we kind of help with that innovation, but keep kind of the frameworks of society in place with central bank digital currencies?
Yeah, I mean, the question assumes that we require central banks to keep society the way it is. But people take different views on that. But I think what's kind of interesting is I think not all stablecoins are created equal, right? So there's always going to be a part of the world. The way I view stablecoins and the way I view these type of central bank stablecoins, they're just different forms of the same underlying currency, right? So if you have a tokenized US dollar, it can be done in different ways. And I think that's the fundamental point. I think it's just different use cases. And going back to the point about micropayments and how you probably don't want to build a micropayment mechanism on Ethereum in the same way that there's certain types of payments or certain types of things that you may not want the central bank coin to be used. So I think it's going to come down to fundamental technology. I mean, even in traditional payments, right? We have debit card, we have credit card, we have ACH, we have cash. I think fundamentally what you're moving there is US dollar. And I think it's going to be the same kind of thing that you're going to see in different forms of stable coins. It's going to be trade-offs and there's going to be benefits for each one. And so I would say that there obviously is some degree of competitiveness, but I would view it more as a Venn diagram on certain use cases as opposed to a complete competition or a complete complement.
Great. Yeah, I try not to assume too many things past tomorrow. That's why I'm just, what has been will be again. What has been done will be done again. There's nothing new under the sun. So I'm trying to remain as neutral as a researcher as I can. That's what any good researcher should do. But my heart does lie in certain places, but we won't get into that right now. And the last question that we have for this section right here for you, Ian, before we get to the main takeaways, stablecoins, CBDCs, DeFi, how can traditional institutions leverage these, and how can they help us accelerate adoption?
Yeah, I think traditional institutions are a little weary of DeFi. One big question is, who are you trading with? I don't know who's on the other end of that transaction I just put through my browser. It's a scary thing for an institution that has KYC concerns and other compliance concerns. I think, our approach on Nexus, the financial sort of arm that we have, we're KYCing everybody and giving people access to interest on deposits. And we're just familiar with traditional sort of institutional requirements for KYC and AML. I think the blockchain will catch up with technology that helps this process. It's not there yet. I know there's projects, there's discussions around helping people that want to know who they're trading with get that information, or at least check a box to say that they're kind of on it's like a green light. I think that's coming. Today, I think the technology is very powerful. When you first use sort of DeFi and you see a transaction go through without having to open up an account with anybody, and you just make a trade or do a loan, it's pretty amazing just to watch that happen for the first time. Very, very cool concept. And I think that people are going to want that on the institutional level. I just think that there's some more infrastructure requirements to get there. And CBDCs, yeah, I think what was said by others, I think it's another way. It's not going to have the innovation that private companies have. Maybe will governments really use blockchains that have been out there? Will there be political discussions around if they're secure, national security? or will they just limit sort of a CBDC to something like a just among banks, just among the privileged few? That's possible too. The industry's been born out of retail, and I expect there's a really strong demand from the retail segment to push forward and use this technology. I don't think that's going to go away anytime soon, regardless of whether or not a central bank wants to issue a CBDC or not. I think one way or another, private companies are going to do stable coins, and this is going to happen. Governments can try and keep up, but if they don't, then I don't think anything's stopping anytime soon.
Great. And we have 5 minutes left, so 1 minute per response. Real quick, lightning round. What is the main takeaway for the audience right now, Kurt? How will stable coins go mainstream? And we could just go in order right here. Kurt, I think you're on mute there.
Sorry about that. I think my argument is it's already going mainstream. Everybody on this call can attest to the level of conversations they're having now. It's crypto and the blockchain and stablecoins have the full attention of the largest banks in the world, the biggest payment processors, governments, etc. So you can see it already happening. I mean, in the report, the volume is through the roof, right? Over the last 12, 15 months. And the other big thing is, at the pace technology is going, does anyone realistically see, paper money being a contender here? I think Edward and Ian kind of continue to make good points here, right? This is really just a digital receipt of $1 or a yen or any other currency. And any asset or most assets can become digitized, right? So if it's more efficient, if it's cheaper, if it's a better method of transacting, then those assets will go digital. So I think we're already getting there. We're already going mainstream.
I mean, just to give some perspective, the stablecoin supply has almost doubled since we released that report about a month and a half ago. It's trying to keep up with this industry is like trying to nail Jello to the wall. So
I thought you were going to say it's almost doubled since we've been on this call. It could also be possible.
Who knows? Yeah, we'll see. So I guess how can stablecoins go more mainstream then, Samuel? 1 minute. What's the key takeaway here?
Payments, right? I think payments is the main one. But let me quote what Elon Musk has mentioned, right? To do something, to really get people to use a product, right? You got to be 10 times better, right? It's the rule of 10, right? You got to be either 10 times faster, 10 times more efficient, right? Or basically 10 times is the rule of thumb, right? And in stable coins, it's the same, right? If you're talking about traditional banking, if you have to send funds, right? There's a delay, right? There's a T plus, right? Or there's a rather large associated fee. Right, but with more stable coins in the market, in the future, right? Like now we have JPY stable coins, USD stable coins, Euro stable coins, right? If I were to send, a JPY stable coin or USD stable coin to somebody anywhere in the world, right? It will only take seconds and it will only cost cents, right? So that is already, better by a factor of 10 or even more, right? In terms of efficiency, right? So that's how you're gonna hook people across to this space, right? And of course, as we mentioned, right, those points with Visa, Master and all, right, they're doing interesting things on their side, right? But the industry is also doing interesting things with wallet integration, right? The crypto wallet is significantly stronger and has much more functionalities than back then, right? Back then it was really just a wallet, right? Now it's like a one-stop portal, right? So I think these are all factors that can eventually, aid in the growth of stablecoin adoption.
Marisa, what is the main takeaway for the audience?
Yeah, I think like Kurt echoed, Sam echoed, I think that mainstream adoption is clearly on its way. And, if it's already doubled since we last wrote this report. And I think there's more and more easy use cases or kind of more, we always talk about just UX and, making it like as simple as using TransferWise. How can we make our product better using stablecoins and almost beat TransferWise? If we can make it better than that, then people will start to gravitate towards using stablecoins and not having to battle with their wallets, having to write seed phrases. I think we've moved on from that, and stablecoins kind of cover some of the points that Bitcoin weren't able to cover. So I think, like as Sam also mentioned, if we can start to develop these payment use cases, then it'll really accelerate. But it's not going to be super noticeable for persons. I hope that we're not like copying and pasting wallet addresses. You know, we're using domain names or using really easy to use, recognizable keys to send money. And there's quite a few providers doing that too. So yeah, I think it's all about UX and how can we, you know, the normal retail person might not know that they're using a stablecoin in the background, but yeah, I think it's on its way to creating these better, we have better designers now, just, yeah, that'll really accelerate adoption, yeah.
Thank you, Marisa. Edward, this is your soapbox moment, man. Let it all out. What is the main takeaway for the audience?
Yeah, this is very cathartic. I think, you know, I don't think people quite appreciate how big GMO is. And I think quite how game-changing this is. I mean, we're still at the very start of the launch of the stablecoin, right? And I think this is going to be one of the big drivers. I think other big companies are going to come into the space. I think you're going to see another PayPal effect. I think PayPal is going to enter the space. I think other big payment groups are going to enter the space. You know, people follow, and GMO is at the front, and other groups will come in, and we'll see a lot of innovation as people compete for speed. I see a comment here from Tim saying ETH needs to be 10x less gas fees. I think it needs to be even less than that, or we start to build on other, and we're already starting to see that. We're starting to build on other blockchains, Algorand, Solana, lots of others. So I think we're going to see massive growth, but the coins that we have today will not be built necessarily on exactly the same technological infrastructure. So I think you're going to see a ton of technological infrastructure along with distribution and big firms entering the space, and that will drive adoption.
Great. And Ian, take us home. What is the main takeaway?
Great points by my fellow panelists here. I think UX is huge, and I agree with Marisa on that. There's making things easier. I can't tell you how many calls I get from people. How do I do this? How do I do that? I want to get into this, and you're kind of walking them through, you know, something that we do a lot, but we forget how new it is to some people. That's going to change the game for a lot of people. The IPO today, just waking people up to the fact this is all happening and fast. I think it's already kind of happened. And to Edward's point about GMO, they're the largest Forex broker in the world. They're talking about a major currency going digital. It's a game changer. And, you know, the more this happens, it's going to keep happening all year. And for a while, there's going to be innovations and companies taking risks and doing things to push things forward. And it's happening extremely fast, faster than any industry I've seen in my professional career. Just, you know, talk about the market cap size, the amount locked in DeFi, amount of transactions that are happening. It's all moving in the same direction. And, you know, the takeaway for anyone that's looking at it, build a product that interacts with it. We need them, and we need infrastructure. We need KYC. We need tools to use things for other financial products like insurance and derivatives and mortgages, all kinds of things. And we'll see it. But I think that's the big takeaway is just go with the trend. It's going in the right direction.
Great way to close this out. Once again, thank you to all of our panelists for both starting your day or ending your evening with us, depending upon where you are geographically. Thank you to GMO-Trust for allowing us to put this presentation together. And thank you to the Block Research. Really, we do appreciate everything. Thank you to everybody that took the time to attend and to watch this presentation. And we'll see you all out in cyberspace.
Thanks.
Bye, everyone.